So just give it a few seconds. I'll show you what I'm seeing. It's okay. I'm waiting for some people to join.
Okay.
This is what they call one case.
You can put the presentation mode.
Hi, everyone. We're just waiting for some people to join. All right. Well, hi, everyone. Welcome to Stuller Facebook Live. Bear with me, my first presentation. I hope you're going to enjoy what we talk about. But we're going to talk about one of my favorite subjects, which is the diamond market. But we're going to talk about a little bit about what diamonds may look like down the future. And let's just say that there's a lot of speculation here because none of us really know. But as we go on, let's get moving. I'll tell you a little bit about myself. My name's Lehnhardt, and I'm one of the diamond directors at Stuller. My primary responsibility is buying any diamond that has a lab report, and that could be natural or mined. I've been doing this now for 15 years, and it's been a great pleasure of mine, and I've learned a lot, and I'm hoping I can share it with you also. One of my favorite things to do is eat. Fine dining is a favorite hobby of mine. And along goes with that is a nice glass of bourbon. And I love to travel. And unfortunately, I'm stuck at the moment because nobody's getting on an airplane. But this too shall pass. All right. I was born and raised in Salt Lake City and moved around the country since then, and I've had the pleasure of living in a lovely place in Lafayette, Louisiana.
As much. Just click through here.
Okay. We seem to be having technical difficulties. All right, so we're going to go this way, folks. I don't understand, but bear with me. Oh, so as I was saying, I have a saying is eat, drink, and be merry. And even in these trying times, I think it's good advice to put things in perspective. And I know it's tough, but I had a good friend always tell me is good advice is don't sweat the small stuff, and just about everything is small stuff. So anyway, let's go on about what we're going to talk about today. A little bit of an agenda. We're going to take a look back on basically the last year so we can see, what the diamond market was like in 2019, just to provide a little context. All right, so quick look back. And then we're going to talk about mine diamond supply and the demand moving forward. We're going to look at lab-grown supply, demand moving forward. We're going to look at both rough and polish of both. We're going to talk about lessons from the past, because it's interesting how diamond and diamond jewelry performs after a crisis, and it's different than you may think. And we're going to talk about digitalization of the supply chain, because with crisis comes innovation, and change happens quickly, especially with technology. All right, so when we start talking about the past, you want to look at it. In 2018, the holiday season ended quite weak, and the sales just didn't materialize that people were looking for. And so that started to set the stage of what happened the first half of 2019. And that is that buyers from America were not rushing to the trading centers to replenish their inventories as quickly as they normally would. And you combine that with weak sales in Asia and a very poor Chinese New Year. And what that caused was basically larger inventories for manufacturers and wholesalers at the same price while they're sitting on excess supply. The cost of rough was very high. So as they continued to buy rough, their margins were squeezed. So prices became softer because it was an increase of inventory. Margins were really hurt, but they had to lower prices to move inventory because of the lack of demand, which put a lot of pressure on manufacturers, especially. So that led to some decision making later in the second quarter and into the third quarter, where they just stopped or reduced manufacturing. And in some cases, they reduced manufacturing as much as 70%. And this started to help. Even though the price of rough was still high, they were able to move through some of the polish they had, even if the margin was low. And nice thing is we started to see increased demand from the West in the third quarter and moving into the fourth quarter. Unfortunately, there was relatively weak demand coming from Asia, because now we were moving into the protests that you were seeing in Hong Kong, which really dampened things. But because of the lack of manufacturing, we started to see a rebound in the stability of the price, because there was just not enough goods, especially in the areas that were what we call the bread and butter American item. So this brought some price stability, and then we started to see a really good turnaround in the fourth quarter. And this led to what started to happen in January of 2020. So let's move on and talk about natural diamonds in 2020. All right, so first off, let's talk about rough demand. Because of the strong holiday season in 2019 in the United States, and what people perceive to be a better environment in Asia, all the manufacturers were strong to jump on and buy rough in January of 2020 to the tune of about $1 billion worth of rough. And that was a little over enthusiastic, and we started to hear about what was going on in Wuhan, and the spread of COVID-19 was starting to take hold and take its toll. So all of a sudden, no Chinese New Year. It was delayed. Nothing was there. In America, we still didn't understand what was going on. But as we move into February, while polished sales were still going very well, you could start to feel the beginnings of the spread of COVID-19. So now kind of know where we're at now. We've had government imposed shutdowns, and New York is shut, and so there's no trading happening there. And India is in the same place, right? So they've been shut down, and so there's no factories operating, so there's no demand for rough currently. So we needed to go, what's more important about what's going to happen with rough demand and price of rough is how does the market react post lockdown? Now, none of us know, and there's a lot of speculation, and there's a whole lot of articles out there, preaching doom and gloom. And some of them are being written by people that are just taking bits of the market and aren't traditional diamond people. So it's easy to make headlines, but none of us know. The ones that have no connection to the diamond market surely don't know. And even as someone is in tune as, say, myself or even other people who are right in the middle of this, they don't know either. But I can tell you from a retail standpoint, it's going to be slow, but I believe it's going to be okay. Now, so how does the market react post-lockdown? And this is very important in price stability, and we want to look at how, first off, the large miners will react. People like Alrosa, which is the Russian miner, or De Beers, do they, leave diamonds in the ground, which I believe they're going to do because now their mines are also on care and maintenance or reduced production because of their own problems with the virus in Africa. So hopefully we don't see a rush to push rough onto the midstream, onto the manufacturing sector. So if we have a reduced rough supply, which will help bring quicker stabilization to the market. I see we might have some trouble with the video, but I hope you can still hear me. Now, smaller miners, people secondhand, there's several handful of these like Petro or Gem Diamond or even Dominion Diamond or even secondhand rough coming out of Angola. They're going to be under much more immediate pressure because they carry heavy debt loads, and they will have a struggle to make a profit, which means if they can't sell the rough profitably, they're not going to spend the money to dig it out of the ground. So what goes on with rough is going to be interesting over the next few months, and we'll just have to wait and see. Now, one of the things that's probably taking place or going to take place is that the manufacturers in India are talking about putting a moratorium or suspending the import of rough for 2 or 3 months, which will really help them move off of the rough supply that they currently have, because it's speculated that they probably have about 1 billion to 1.5 billion worth of rough in India right now, with all of the factories shut. So they're going to have to work through that inventory. So let's talk about polished supply now. I think this is probably a little bit more interesting or more important to the lower down the chain on the retail side. So as I had mentioned, 2020 had huge rough purchases, but they didn't have a lot of sales. I mean, they were selling good for a while, but then the virus took hold, which means most manufacturers and some wholesalers, are sitting on a lot of polish that they're going to be waiting to sell when the market back open. So will there be an impact on price? I'm sure there will be. The question is for how long and how low. And I think if things are managed correctly, it's not going to be anything like people are predicting. Because we don't really understand what the impact of the factories being closed are. So the factories are closed in India. No one's cutting rough. And we don't believe that they're going to begin to cut rough probably at the earliest to the end of May. Now, even then, when they start back up, it's not like flipping a light switch. They had, depends on who you talk to, anywhere from 300,000 to 500,000 diamond polishers, and a lot of them, when the factory shut down, they went back to their villages, and they're not going to race back quickly. So you're not going to be 100%. Plus, there may be some sort of social distancing that's required in these factories. So you're not going to be able to put all those people in the same way that they were before, and that's all going to be thought out, which is going to mean lack of new polish coming online, which is a good thing, because all of the business is going to start back, but it'll start back slowly, and it's going to give us an opportunity to work through that polish and into the global supply chain. Now, some of the pressure from all of this, and especially if you're carrying lots of debt, some manufacturers and wholesalers may not survive. And while tragic, the good thing is that, maybe this also leads to more polish being available, or less polish being available, excuse me, and it will equal demand. So part of the problems we've had in the past is that we were producing more polish than there was demand. If we can get the supply-demand quotient in line, then you'll have a quicker recovery. And nobody talks about one of the other things that can affect the global supply chain or the availability of goods is, what about the gem labs? And they're in the same boat. GIA is closed. IGI is closed. And when they come back online, they also probably will not come back online full speed. So you're not going to see the amount of goods processed as quickly as it had been in the past. All of this leads to, a nice trickle of goods that hopefully, can slow this down and lead to some stability. I do apologize if you're still having video problems. It must be too much buffering. All right. So let's move on to polished demand of mine diamond. Initial demand, of course, will be slow as we ease back in, but there's going to be demand, and the emotional effect of the crisis could lead to the unexpected. In the sense is that I think there's going to be greater demand than some of these gloom and doomers are predicting. And we're going to talk about that a little later in the presentation, about what past crises have shown us. Diamond is a unique item, and while it comes out of the ground and be considered a commodity, it commands great emotional significance, and people use it to share bonds and how they love. And so when crises like this, and with social distancing, people are going to want to use diamonds and diamond jewelry to express their desire for these bonds and this closeness. Like I said, there's also going to be manufacturing capacity that is reduced, and lack of certain goods. So you're going to see demand for a lot of the same items, and this competition for desired items will lead to higher prices. So while people like to talk about prices going down, usually what happens is that, on an aggregate, you can say, yeah, 3-carat deflawless diamond, you're going to be able to buy for less money. But a nice 2-carat ISA2, which is going to be in very high demand, all right, is going to command a price, because there's going to be only 50 available, as an example, but there might be demand for 100. And we see this time and time again. So I think there's going to be good demand for polish, and especially for what I call bread and butter American items. Now, the one thing we have to consider, and I'm going to talk about a little bit more when we talk about lab-grown diamond, but there is cannibalization of mine diamond from lab-grown. And none of us know what that effect is, but you saw some of it in 2019. You'll see more in 20 and more in 2021. Now let's remember, there's demand for both these products, right? And they will live side by side. It's just the markets have to figure themselves out in where they land. So with that being said, let's talk about lab-grown diamond for a minute. All right, so lab-grown diamonds. Now we're going to talk about rough supply. Okay, so it's pretty simple. So we know that rough comes in two forms in lab-grown diamonds. It comes in HPHT and it comes in CVD. All right, so HPHT rough that is primarily in the smaller sizes made in China. Um, the availability of this will be reduced in the short term because these factories obviously were shut down when the virus first started in Wuhan. So what you see there is, it's going to take a while for that rough to come back online full capacity. All right. And then now HPHT is also grown in Russia and the Ukraine. Now, this is in better shape because they never really stopped growing. All right. So they have rough. However, India was closed and China was closed. And this is where the majority of the polishing of this product was taking place. So they're sitting on rough. All right. They were unable to polish. Now, CBD that's grown in India, and where a large portion of the CBD is grown, is surely going to be reduced in the short term also. Because my understanding from people that I have direct contact with is that while they were growing, if they had something in a cycle, meaning it was still in the chamber, they finished that. But once that cycle was finished, they did not start a new batch because they were all on lockdown. All right. So for the short term, we don't know how much rough, CBD rough coming out of India is going to be available other than rough that was already finished. And again, you have rough, but no ability at the moment to polish it. That leads to CBD grown in the United States, all right, which there are two very large growers in the United States and a couple smaller ones. This was probably primarily uninterrupted. All right, even with the lockdown, it doesn't take a lot of people to monitor the cycle of what's in the oven. So they were still able to grow, but same problem as everybody else. Now they have rough, but nowhere to polish it. So there's going to be good supply of rough. And then even after it's polished, a lot of it needs to go to a lab, and there's no lab to do the grading. All right. So while there's a lot of supply, they're not going to be able to convert that rough supply to polish quickly. All right. So now, what about rough demand for lab-grown diamonds? It's unknown, and it depends how quickly polished inventories move. But I have a strong feeling that polished inventories, once everybody starts to act up, are gonna move well. And if you look at the sentiment of 2019, if that carries over, then the recovery is going to be quick. Especially when you think about if there's real pressure on mined polish in terms of price. And they think that there's still better margins on the lab grown than the manufacturer, the polisher may run to rather cut lab grown rough than natural rough if it's more profitable for them. And some factories, I don't think anymore that they want to keep them up and running. I don't know that they care if they're cutting lab grown or if they're cutting natural. But one of the interesting things, and we've talked about this before, is that capacity won't be 100%. So both lab grown people that have lab grown rough and people that have natural rough might be fighting for the same manufacturing capacity. Again, so this all leads to a better amount of polish in the market to hopefully help for a quicker recovery. Which leads us to polish supply. Again, it will be reduced in the short run because of the lack of manufacturing, and waiting for those factories to open back up, be it in China, and of course the largest ones in India. But the nice thing is I think there's going to be increased demand for lab grown, because of the price points that afford, and so this is going to put pressure on growers to expand their capacity. And they were already looking to expand capacity, before all this trouble started. So hopefully, this is going to allow them to, not only grow more, but grow more of the in-demand items. We need to grow more fancy shapes, or cut more fancy shapes, I should say, because there was more demand for fancy shapes in the market than there was supply, especially in certain shapes and sizes. So this should go on. So I think that for lab-grown diamonds, they may fare out of this crisis better, especially I think when people have lower price point needs. So it's going to be interesting how this all shakes out. But I'm bullish about the lab grown diamond, in the long run. Now, so I jumped ahead a little bit when I was on that last slide, and we were talking about polished demand. And like I said, is that I think the sector should continue to grow, and it will have an advantage, because of its price point. Now, one of the interesting things that was getting ready, I think, to play out as the lab grown market matured, even prior to to this virus taking hold, was as the market matured, there was starting to be questions, or segmentation of, is it CVD grown or is it HPHT grown? Or another way to put it is treated versus as grown. So as you may know, a majority of CVD is secondary treated, to improve its color. All right. So, but I don't think anybody ever asked the question, is one more valuable than the other? And it's not. The market will have to differentiate that. But we know that some people in the market, are only selling HPHT. And I think you're going to see some segmentation where the question will be asked, is this color, as grown, or has it been post-treated? And we don't sure how that's going to play out. So it's going to start, we're going to see some segmentation in the market. How that plays out, I don't know. I don't believe that anyone knows. But it's going to be interesting, and it will happen as this market, expands, and becomes more mature. And the question is, are they two different price points? We know that natural diamond versus a natural diamond that's been treated to improve its color using HPHT is a completely two different prices. Could it be the same in man-made diamond or lab grown? I don't think it's going to be as big as people think, because I think the consumer in the end thinks, well, it came out of one machine. Does it matter that it came out of two machines? But regardless, there's still going to be strong demand for, lab-grown polish. Now let's talk about what I think, is the silver linings around all of this, and what does the past teach us, when we have crisis? Well, let's look at three things that have happened in the not so far, past. So 9/11. All right. So 9/11 changed a lot of things, but it affected, America strongly. And sales for diamond and diamond jewelry, post 9/11, the year following, grew 20%, while, global retail only grew 5%. This shows you that when there is crisis and people start to feel connected to their loved ones because of this, they reach out for a way to, show how they care. Then we had the, banking crisis of 2008, the subprime, dropout. Now, in 2009, sales grew 3%. Now, I know most people would say 3% doesn't sound like a lot, but when you consider that most other product segments were negative in 2009, 3% means something. And then just another thing to look at is that the earthquake in Japan and then the subsequent nuclear disaster at Fukushima in 2011, Japan's diamond imports increased by 32%. So there's a strong correlation between even as their luxury wallets are impacted, people will generate to the emotional side that jewelry offers them to show how they care and how they want to bond with their loved ones. So I think that's good news. One of the things that we're going to see, lastly, to talk about from this is, a hastening of the digitalization of the supply chain. Now, the supply chain for diamond and all of the products was already changing, but crisis and technology hasten that. And when you combine the two together, things are going to happen much faster than I think a lot of us said. So as we try to bring our businesses back online and we want to add value and we want to be important, you need to innovate and you need to embrace some change, or you're going to stagnate and you're going to find it much more difficult to find your place in the new market. There was always talk about the need for greater transparency in the diamond business, especially on the manufacturing side, so that to attract financing for the manufacturers. And this will continue. People are wanting to know, where did the rough come from? Is it non-conflict? Is it Kimberley compliant? All the things we always talk about, but it has greater importance to a lot of people. And this is going to lead to, there's always those that want to know the provenance of their diamond. Where did it come from? Did it come from Africa? Did it offer good to Africa? Did it build schools? Did it build hospitals? Did it provide education? People want to know that the item that they bought was for good, all right, and not for bad. And how do you prove all that? And how do we follow that with all the technology today? People talk about blockchain, and that may be one of the things that really starts to take hold quicker than anticipated. But as always, the first thing you need to know, if you want to feel comfortable in your supply chain, is to trust your supplier. This is most important. And this is where we get to the summary of this whole page, is that we can talk about all of these ups and downs of the diamond market and everything else. And for somebody that's in a position like Stuller, if you're a manufacturer, all of this is very important. All right. But as retailers or people that are selling to the public in America, all right, while important to you, if you have the right supplier, then they're going to get you the right product when you need it. All right. And what you need to do is not worry so much about that and let somebody like me worry about it. Let me manage it. All right. Because then I'm going to be there to support you. So you have the product that you need when you need it. You need to take this opportunity to get back on your feet and remember that diamond has such an emotional component. All right. And diamond jewelry. A very wise man has told me that as long as there's love, lust, and greed, there will always be a jewelry market and demand for jewelry, and it's 100% true. And I think more importantly today is people are going to want to show their bonds to their people, and with social distancing, they got to look for ways to do that. And lastly, let's remember that while some people were changing their desire for jewelry, maybe to go on a vacation or something like that, and to have this experience, none of us are getting on an airplane anytime quick. So what's the best way to show how they feel about their loved ones? And that's to give a piece of fine jewelry. So with that being said, everyone, I hope this was helpful or educational. And I want to say thank you very much. And if you have any questions, please feel free to email me directly. Carl_Lehnhardt at Stuller.com, and I'll be happy to answer any questions that you may have. Thank you.